Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, the big news, of course, was the Amazon loss, which was huge. And I want to show you exactly how the trade triangles handle this, because this is why I think they're so powerful and they really do listen to the market. Let me show you exactly how things played out. So the first thing, I'm just going to put my weeklies on here. So just click on the weekly trade triangles. And you can see we got out right here. This is our exit point, 330.80. That was on September 9th. Market came down. But the important thing is, as it came down, so we were out. Didn't have a long position. We're just totally out of the market. We'll put in our monthlies. Boom, there it is. There's the monthly, 304.58. Now, we were short coming in to the earnings report. We had no idea what it was going to be, but look what happened. So we're in a good shape. Now, is Amazon going to keep going down? That's a good question. I somehow doubt it, because we're very close to this area right here. It's 284. That's pretty much where the market stopped today. And I think that's where it's going to hold, at least for the short term. And we may see a little bit of a bounce here. From there, we'll have to see what happens. But Amazon's greatest problem is what's coming down the line. And what's coming down the line, in my opinion, is Alibaba. Jack Ma is a very charismatic figure. This week he's in Hollywood trying to buy a movie studio, and content. He wants to open up the Chinese market to American producers and manufacturers. So that's going to be a really interesting competition between Alibaba. And Alibaba already has 500 million customers. So think about that. That's huge. So that could be real competition for Amazon, who works on razor-thin margins. They have some profitable businesses like their cloud business, and also their advertising business. But we'll have to see how this plays out. But right now, the market's telling you it's not happy with Jeff Bezos, and then maybe this love affair they've had with him is over, and maybe they want to forget all these different directions the company's going into, like phones they came out with, which were a big loss, and some other ventures they've gone into. So let's see how that plays out. Now here's the Dow. You can see we have a plus 55 indicating a trading range. We've had a large run up. We're right back to the 50 line here, which is resistance. I don't know, I'm not so sure if we're going to continue going higher here, but if we look at the weeklies, let's just take a look at the weekly chart, and you can see this is a very good week in terms of what's happened compared to last week. So this is the, if you look at the closes, so that we closed right here at 16,544, closed here at 16,380, and here we are today at 16,711. So it's really come back a lot. I think we'll sort of jockey around here for a while. I don't think the market really knows what it wants to do. We're back up to the 50 line on the weekly. So this is where resistance should come into the market. On the S&P, we just crossed over the 50 line. Obviously, this is a very good week for the S&P 500, but it's still a 55. We still have a weekly and monthly trade triangles negative, so I would be a little bit careful with this market. I wouldn't get too enthusiastic on the long side. Now, the NASDAQ has come back like a rocket. As you can see, boom, very, very big move. Now, you've got some big markets there. We're going to be talking about those in just a few moments, but again, you're over the 50 line. We still have our trade triangles that are negative, and you can see our weeklies came in at 4.542. Even this huge rally has not gotten to where we got short yet. So let's see how this plays out. The dollar index also put in a good week. It's still in an uptrend. You can see all of our trade triangles. The last one was right here at 80.40. Still very, very positive on the dollar. Gold continues to be lethargic, back in a trading range. We're out of this market. You know, we use the weekly for trend and the daily for timing, so we're out from 12.35. It's 12.32, not a big difference, but we want to be on the sidelines, at least for the short term. Let's see how that also plays out next week. Crude oil keeps going lower and lower and lower. You know, we've been bearish on this market for some time. We've done very, very well in our World Cup portfolio in being short oil, and it's paid off big time for us. You can see our last signal was at 91.45, and here we are currently trading at 80.53. So again, huge profits in this position. Now here's a great story. This is Apple. Apple is going to be closing, if we close up at these levels, 104.96 or 105, just over 105, this will be a new high close for Apple. If we do close higher, this would be an excellent candidate for the 52-week Friday high rules. Okay, let's look at the 52-week new highs on a Friday rule. What does it mean? Well, the good thing is there's only 3 rules that you need to trade. And remember, rule number 1, on a new 52-week high when the market closes at or close to its highs on a Friday. Buy and go home long for the weekend. Now you want it to close pretty close to the highs of the day, not necessarily on the exact high, but close to the highs. Rule number 2, exit this long position on the opening the following Tuesday. So you're going to buy it on a Friday, sell it on a Tuesday. Very short term. Rule number 3, if the market opens sharply lower on Monday, exit the position immediately. Take the loss and move on. There you have it. These are the only 3 rules you need to trade the 52-week new highs on a Friday rule successfully. The rule applies also to futures and Forex, and you can reverse the rule. If it's at 52-week lows, you can actually short the market if you feel comfortable doing that. Simple approach and very effective. So closing on its best levels for the week on a Friday, you want to be long this stock. It looks to me that this stock could go up to the 140 level, and that's what we're shooting for. Very bullish on Apple right now. It's got the iPhone 6, which is very, very successful. It's rolled out the 8.1 system for the iPhone and iPad. The Apple Pay comes out. Lots of positive news on that front. Now this is Alibaba. It hasn't been trading that long, so we don't have all the trade triangles we would like to see, but certainly this is the market I think you want to be in. It's closing at or close to its high for the week, 95.84. I think we'll see this market touch 100, perhaps as early as next week. So great weekend play. Another great weekend play is going to be Facebook. If we close towards the highs of the day, we've currently traded, the high today has been 80.63. We're about $1 from that level. I think if we can close over 80 or close to the highs, I think you want to be long Facebook for the weekend. Again, I think the key here is going to be just trading with the trend and protecting your capital. You can see all these trade triangles are all green here on Apple, Alibaba, and Facebook. You want to be long those stocks and also long the dollar index. The other markets, that's a little choppy. Be careful with those. Hey, this is Adam Hewison. Have a great weekend, everyone. We'll talk to you on Monday.